Okay, welcome everyone. Good afternoon. We'll start our lesson 3. Today lesson will go through LO3. As a couple of you know me, my name is Anjum Satak. Please, if you have any question, drop me email anjum@ukuniversity.co.uk and I'll try my best to get back to you as soon as possible. So today lesson is about LO3, which is be able to calculate and complete the VAT return. So that's the key in our business taxation. That topic also very important is VAT return. So during our last lesson, we discussed about business taxation. We had a discussion about marginal relief. We discussed about corporation tax. We discussed about the rates. We had a discussion about ethics. We discussing about capital gain. We had a discussion about incorporated and uncorporated business corporations, and we discuss about sole trader and partnership, and today lesson is focus on our LO3. Okay, so let's please we'll start. So today is VAT, so always good to be pleased any uh, really any question we start or we start delivering, always good to be reflect how much you know about VAT. Do you know the rate of the VAT? Do you know the VAT different schemes of VAT, value added tax scheme? You you look, the rates of, so these, we need to be look around is very important. We need to be look around these schemes. Very crucial. We have to look around these accordingly. So we have to measure them. Okay, guys. So let's we move to the next. Okay, so we had discussion. We are applying the rates, 20 to 23, which is VAT return 2023. It's also very important. It's good to know, the which VAT return, which VAT on which finance sect we are using, which rates, and what is the threshold of the VAT. Is 85,000. We can deregister ourselves, if the turnover is dropped down to 83,000, and VAT value added tax rate is at 20%. So we had a discussion in, so that's which we need to be look around. So yes, we had discussion of corporation tax, the percentage, marginal relief, yes, value added tax threshold. So we need to be look around always in the finance act. Standard rate is a 20%. Registration, which is a compulsory to register if your turnover is 85,000. If your turnover drop down to 83, you can deregister or you keep the volunteer registered as the company VAT, because you can claim back input VAT, so that's we need to be look around. Next now, I included link for you, Kahoot. Please, you can play the quiz, at the end. It is quite good to enhance your understanding that how much we know about VAT. Let's, we'll start. So 3.1 describe the registration and administration procedure of VAT. VAT is, of course, is a value-added tax, is an indirect tax. Normally, really beer, is final customer, administrated by HMRC and collected by VAT registered traders in the course of their business. So like, on the sales, we are known as a tax collector on the behalf of the government. So you're collecting tax, you're paying the VAT to government. Okay, so VAT registered charge output tax on the sales, reclaim the input and input tax deducted from output, and the next payment or repayment submitted to HMRC and VAT return completed. The scope of the VAT also applies import of the goods. VAT applies the taxable supplies of the goods and the services made in the UK by taxable person in the course of a business. So person who is registered, so we need to be look around, acknowledge needed to be which category the item is belong to, standard rate, reduced rate or zero rate. So what is meant by zero rate? When there is a no VAT, why we include the zero rate, the goods. Of course, we not charge the tax on because the 0%, but that count toward the threshold, which is 85,000 pounds. So if you have the sale of zero rated product, that will be clustered as okay, taxable supply at applicable rate, charge output tax, can reclaim input tax. Exempt, supply not chargeable to tax. Exempt supplies cannot be registered and cannot reclaim the. Okay, so we have to look around the compulsory registration must register within 30 days end of the month if the taxable supplies excluding VAT exceed the registration limit in last 12 calendar month or must registered without delay at any time. There are the reasonable ground for believing the valuable tax supply will be exceed the threshold next within 30 days. So voluntary registration, a trader can choose to be VAT registered even though its supply below the registration threshold. What we said threshold, guys? So according to the Finance Act 2023, now we have 85,000. Previously it was. So please in the slide, maybe you have, come on, why it's showing 83? That was the Finance Act even in the previous years. So we can look around the current Finance Act, which is I shown you earlier. That's the crucial to keep in mind, which is 85. So in the past was 81, to be registered. So administrative burden, possible penalties, and non-VAT registered customer disadvantage. Okay, so if we look, does the business make any taxable supplies? Are the taxable supplies expected to be more than 85 in next 30 days? If yes, must be registered. If no, then of course, do taxable supply date maximum 12 months exceed 85 historical turnover? Yes, we should be registered. Cannot be registered if the taxable supply not required to be registered, but can voluntarily register. Okay, so of course, guys, we have now the Finance Act 2023. If you deregister voluntarily if the taxable supply of the following 12 months will not exceed 83,000. So threshold exceed the temporary, the trader can apply exemption from the registration if they can demonstrate that the threshold has been exceeded only temporarily. Failure to register supplies made after effective registration date deems to be VAT inclusive and the trader must pay the appropriate VAT on the sales to HMRs. Trader can seek to recover this VAT from the customer. Okay, guys, I included the link here. Is we do e-learning of ATHE. If you want to do some work or you want to look around extra resources, we can. Or other than is gov.uk. Is it appropriate? The website. Okay, so what is the each supply is treated as a taking place on the tax point. So the good date on which the goods removed are the made available to customer and the service is completed. We not you make an agreement and we say, come on, I claim the VAT whatever. So no, because you have to be service completed. That point will be known as a tax. Actual tax point, the date of the invoice issued, or the payment made if the before the basic tax. Alternately, if earlier tax point is not used, the invoice date and the invoice issued within 14 days after the tax point that can be used, so you can include in that quarter really matter. Deposit, and advance payments. Yes, there are maybe tax point when deposit is paid, one of the deposit and other is the balance. So tax point and the deposit is often to the payment date as the usual occur before the delivery. So actually we need to be look around the delivered date. So we have to look around the pro forma invoice as the no impact on the tax point. Wait for the real VAT invoice before determine the tax. Okay, guys. Then again, I included the link for you to good to go through and look around e-learning of the tax points. Okay, next we have a tax point. Deposit in advance. There may be two tax points when deposit in advance and one for the another balance. The tax point on the deposit is often the payment date are usually occur before the delivery and pro forma invoices, as we mentioned, with the real invoice. Okay, then we look the error correction. Also, VAT is very important. If inter error is not deliberately, but then greater than 10,000, 1% of the turnover, it will be exceeded the error correction reporting threshold. Deliberately error must be disclosed. Errors must be disclosed separately to HMRC error correction team. Error exceeded the threshold cannot be adjusted for the next VAT return. Error report in writing to HMRC and error correction team VAT 652 form need to be filled. As it not exceed the threshold, cannot be corrected on the VAT return. Box 1 and box 4, the errors, which will just show you the boxes, what is meant by these. Late payment issues with the surcharge liability notice, SLN, late 12 months, the payment default in the period leads to the surcharge assessment. If the VAT return is not submitted, then the HMRC can raise an assessment on which believed to be owed. If business fails to notify within 30 days, this amount is low or may be liable for the penalty. And careless and deliberately errors may be liable the penalties, and whether adjustment for the next return are reported separately. Inaccurate return penalties can be reduced if tell HMRC as soon as possible. Failure to keep record must be kept 6 years. Penalty could be imposed. Yes. So failure to register a penalty can be imposed, for the failure to register proper date. Okay, fraudulent variance of the VAT. So falsely reclaim input VAT, understand the output VAT, and falsely obtain the bad debt relief, falsely obtain the repayment. Tax avoidance is illegal. Tax evasion is a criminal offense. Penalty minor cases of variance will be settled with the penalty, and extreme cases might be result into the imprisonment. Okay, HMRC notify the changes via bulletin, notice on the website. Impact on the system. Computerized system may be need to be adaptation of the accommodate the changes in the legislation. Support may be needed in from the software house. Customer must need to be informed. Significant changes affect them, and the marketing and account and the staff, so need to be informed. Okay, guys. So next we have different schemes as well. Contact HMRC if you have any issues. Contact client. HMRC should always make the polite and professional manner. Consult the website first. No luck, telephone. Third is the option if you want to contact you right to or via letters or email. So we have the fundamental ethics, those we need to be follow. Professional code of ethics, these, PPCIO, professional people chat enough is like first P is the professional behavior, professional competency, due care, up to date, confidentiality, objectivity, true and fair, integrity, and objectivity. That's all, we need to be look around the ethics and we have to follow those. Okay, different VAT schemes which we can look around. Anybody, any question? Let's guys, can we spend 2-3 minutes look around these, VAT schemes first? Which scheme you want and what are those schemes? Huh? Spend 5 minutes, please. Okay, guys, thanks. Let's, annual accounting scheme, which is mean once a year you do account if your turnover is 1.35 million, which we can look around, and it can go 1.6 million excluding VAT. You can, if your turnover is more than that, then of course, we have to register with the we have to move to the change, the scheme, and the advantage is only one return, and the payment can be separate throughout the years. Is monitor the supply to ensure the turnover is limit and not exceeded, and the payment is based on the previous year turnover. That's, we can cash accounting and annual accounting. Accounting for the VAT on the basis of the cash received at the payment 1.3 is exactly the same, and annual. So this scheme can be used with the annual accounting scheme, like you do one return, but you do on the basis of the cash. So bad debts can be adjusted. So advantage usually is a long period credit given to the customer and automatically bad debts relief, because the reason, you only pay to HMRC when you receive or make the payment you claim. So that's the benefit of this scheme. Flat rate. Flat rate is mean M1 rate. You don't have to keep, input and output. So if your threshold is 150,000, so you can join, and may be able to be annual accounting. With annual accounting scheme, you do one, must leave the scheme. If your turnover is exceed, including VAT, 230,000, you can't stay on the flat rate. Flat rate mean you're just paying one rate, and you're not looking. So simplified administration need to deal the VAT and the purchase invoice. It can lead to the less VAT payable. Discount 1% given the first year of registration on the flat rate, and cannot be reclaimed the VAT on the purchases and the expenses, and the flat rate applies to the turnover. Zero rated and exempt suppliers. Flat rate is applied turnover, including the zero rate and exempt suppliers as well, and the more VAT must be paid. Okay, so as we mentioned, we need to be look around the ethics, and then we have the business entertainment and all. So input tax on the business entertainment cannot be reclaimed if the entertainment overseas customer. Input tax on the entertainment staff can be reclaimed, and the cars and the carbon input tax on cannot be reclaimed on the purchase of the car. Input tax can be reclaimed on the purchase of the van which it is used, if it's any private use. So we have to look around the exceptions. So exclusively the business purposes within the taxi business for driven, inspection within the self-hire, and reclaim input, tax on the purchase of the all the fuel, and the pay output tax if the private use of the fuel. Okay, so when input tax recovery on the purchase, yes, most of cars no, and charge output tax on the scale, yes, no, exempt. So these we can look around different attributes, those are quite crucial to understand. Partially exemption, so a business make, some of the taxable and some of the exempt. Exempt can be in the taxable. So VAT attributes, input VAT relating to the wholly of the taxable supply fully recoverable, and the VAT is exempt supply input wholly exempt, supplies may be recorded subject to the de-minimize limit, on the invoices we have, that's the rules, all the input of VAT is recovered if the total input attribute exempt supply is below than the de-minimize limit, which is 100. And so we can look around the export to EU, zero rate, the import to EU, that's, which we need to be look around in the boxes, and output, so of course, a lot of things are chaining, dispatches, the person supply, the goods and services, and acquisition mean the purchase, outside EU. And these are the rules are still, the place post Brexit referendum, which we can further look around, because a lot of things are changing accordingly. The VAT registered must be kept 6 years. Yes, sale day book, sale return book, cash receipt, purchase return, cash payment, and petty cash. So standard rate, reduced rate, exempt. So we have to proportion accordingly, and the VAT need to be paid accordingly. Okay, then we can look around the invoices. Required details, name, VAT number, supplier, quantities, all these are quite crucial detail invoices. Maybe issue the invoice in amount no more than 250 inclusive at the simplified, not detailed one, less detailed, but otherwise it need to be more detailed invoices to claim the VAT, yes, decrease input and reclaim the pro forma invoices cannot be used as a reclaim for the VAT. That's really we need to be kept in mind. Trade discount, of course, we can deduct at the time of the purchase, and the settlement discount if the settlement is a happen. Now we have to look around that, if the things are settled, then we can further invoices of the plus, VAT discount not be taken up by the customer. The credit note is discount, plus VAT discount is taken and none. So these are the rules change. So we have to look around the bad debt relief. We need to really wait for 6 months, and then we can claim the bad debt relief if the invoice is 4 years and 6 months old. So bad debt must be more than 6 months overdue, but less than 4 years and 6 months old, which we can return off, we can claim it back. Okay, so guys, we have to look around the VAT on the credit purchases, VAT on the cash purchases, bad debts, EU, all these, we need to be cash books and all, So VAT goes on the same side which goes the debt collector. So if you need to be calculate, divided by 1/6, that we need to be to if it's an inclusive VAT, so we can find the element of the VAT. So we can fill the box, VAT on the period of the sales, output, how much we have, VAT on the purchases, how much we have, total a box 1 and box 2, which we have to look around equal to box 3, sum of, so we can look around box 1, how much the VAT on purchase, minus box 2, how much on the sale, equal to box 3, then VAT reclaim on the purchase, other input, acquisition from EU, how much we have, the sale EU, the box 3, plus box 4 equal to box 5, and then we can look around, the VAT and other output, excluding any VAT, including the box figures 8. We have to look around the sales, we have to find the VAT there. So please, these boxes need to be filled accordingly, and that's, which we will go through in a few questions. So please, box 1 is the value of the sales and goods. You will see the box 2, box 3. So all need to be filled accordingly when we submit the tax return, VAT and the return due date return. If you have to follow the schemes, and need to be make the payment. So late return and the payment, if we have, then of course if it deliberately, it can be charged the penalties, inaccurate return, failure to register. So fraudulent tax avoidance, and of course, it can lead to the criminal. And please, if the errors can be corrected on the VAT return, no more than 10,000, between 10 to 50,000, but no more than 1% of the turnover the country rate, not deliberately being done. Errors must be separately disclosed if they exceed 50,000, exceed 10,000, more than 1% of the turnover is, and that they are deliberately are related to accounting period, and it less than greater than 4 years, if greater than 4 years ago, that's 4 years and 6 months. And then please, I included here the link, which we can look around and go through the filling boxes of VAT return. And I included the link for you if you want to do the questions, like test your understanding questions or postpone. That's also help you. Anybody, any question? Yes, no. Okay, so today our discussion was LO2, LO3, about the VAT, value added tax. We discussed about tax scheme, we discussed about standard rated, zero rated, and annual accounting, cash accounting, flat rate, all was in, and the standard rated VAT, return. And we went through the form of VAT, how we can fill it, and that all was in our lesson. So next lesson we'll do assignment discussion. If you have any question, please drop me email anjum@ukversity.co.uk, and I'll get back to you as soon as possible. Thanks for attending and have a lovely weekend.